Hey everyone, welcome to Sterling Stock Picker live call. It is Tuesday, June 9, 2020. Will this year ever end? Who knows? I saw something funny on Facebook. It was like, I'm just putting up my holiday decorations and calling it a year. What a great idea. But we've got lots to talk about in the markets today. So let me go to my screen share here. And let's dive into what the market's doing. So we are seeing a market relatively high, 27,322. Currently on the Dow, off slightly today. Again, not really a mystery why the market is up. I mean, we're clearly seeing that a few things are happening. I've been talking about this on the live streams. Lots of money coming into the markets from the governments, bailouts for mostly the larger corporations. And something interesting too is that the Federal Reserve in the United States is going in and buying up all of the treasury bonds, corporate bonds, even debt, the lowest debt rated bonds available. They are snapping them up. It is clear to see why they're doing this. They're doing this to keep the market propped up and so that there isn't an overall collapse in the market. So this is strategic. This is artificial. There's really nothing. There's certainly not some, there's certainly, this is not earnings driven or economy driven. I've been talking about that for a while. There's two very distinct things going on. We've got our economy going on, which is high unemployment, very low GDP. In fact, the GDP, gross domestic product, is in the negative territory. So it really makes very little sense what is going on with this market. The only thing I can describe this as a false economy or false stock market, an artificially created market. And look at, as we look at this market, take a look at the NASDAQ is almost at the 10,000 range. I mean, do you see this? Almost like just knocking on the door of 10,000. Unbelievable. But NASDAQ, as we've been talking about, is technology heavy. So that if any index were to do well during this time, it would make sense. It would be the NASDAQ, because it's like I've been saying for months now, it's the technology stocks that are fueling this rally. Crude oil it seems to be somewhat stable at $38.55 a barrel. That was necessary to get some type of stability in this market and sensibility. Gold is going up today, up 1%, a little over 1% at $1722.90 an ounce. That's interesting because typically when the market is stable, gold kind of moves sideways, not a big move. But we've seen a tremendous move in gold already this year. I have to calculate the percentage, but I imagine it's about 20 to 25% already this year. And even with the market having the whipsaw of down 10,000 points and back up 7,000, gold is still absolutely hanging in there. Silver, another $17.85 a silver ounce. It's still at a decent level here. I think silver's a buy. So as you align with companies to invest in this market, look for companies that are in the natural resources, gold, silver, things of that nature. All right, something else to look at is this 10-year bond. The yield is dropping quite a bit today. Down 6.67%, or almost down 6 cents. And that is not a good indicator. We need the 10-year to be relatively strong and stable in order for this market to continue to go higher. So that's something that we definitely want to keep an eye on, is the 10-year bond or 10-year treasury. And like I mentioned, there's very little, few buyers out there buying the short-term treasury bills and treasury bonds. It's the Federal Reserve coming in and basically making a market for those issuance because no one else is buying them. So essentially, the Fed, not only are they pumping trillions of dollars into the market, but they're also going into the open market and buying investments because no one else is wanting to do that. There's going to be an interesting outcome to that, because that essentially at some point is going to mean that the Federal Reserve, the corporation called the Federal Reserve, is going to own a lot of U.S. investments. We're seeing this play out in other parts of the world too, in order to prop up the economy and the markets. So we need to keep an eye on this. Okay, I also want to talk about Nancy Pelosi's husband. If you've been following politics, which is crazy making, but this is kind of interesting. She's the Speaker for the House in the United States, and her husband apparently is a businessman, and he sold millions of dollars of Apple, Facebook, and Visa stock in the month of May. So we don't know what he recently disclosed that her husband, Paul, sold millions of dollars of stock in May, including large blocks of Apple, Facebook, and Visa. Businessman Paul Pelosi sold 8,000 shares of Apple on May 8th for a range between 2 and 7 million. So on that day, the stock traded, the low was 304.29 and the high was 310. Well, Apple today is 343, so he's not the most ingenious seller, because he's just lost another 10% as the stock continues to climb higher. But what I'm trying to suggest here is no one is seeing or saw this type of movement with these stocks. That's why I don't even think the politicians know what's happening with this, because they're so greedy when you get to the United States, that I'm sure if, his wife would have said, "Hey, Paul, you just hang on a little longer because this thing's going to go higher." I mean, who knows what the conversation was. But if there's any companies that are complicit in this movement, or, in this potential nationalization of all of our major industries and government takeover of the world, it would be Apple and Facebook. So I just find this very interesting, why he is selling out during the month of May. Obviously, a lot of them are expecting a correction in the month of June. It's got to happen, right? I mean, let's talk about this thing. At some point, the correction has got to happen, because this has been, like I said, there are no fundamentals driving this market higher. It's pure manipulation. And at some point, they can manipulate it again to the downside. So just be cautious as you invest your money. I don't mean be scared or afraid, because scared money doesn't make money. I just simply mean be cautious. And, at this point, if you're still in the market, like a stock at Apple at $343 a share, you may want to pull some profit off or some money off the table. This is the highest the stock has ever been in the history of its trading right now in this very moment today. So that would be something that you'd want to consider. And raising some cash, leaving some money on the sidelines. Okay, I want to do something a little different today. I want to look at our software that you are a member of and a supporter of. Thank you so much, by the way. Thank you. We are so grateful for you. We have a developer meeting every single weekend, and this weekend we have an idea that we're going to roll out here in a couple of weeks. We think you're going to absolutely love, and it's going to help you become an even better investor. And that's really our strategy here, is to help everyone who's a part of our community become financially independent, become an incredible investor on your own, and empower you with tools to help you get there. So I wanted to thank you, Sheena. Our dear friend Sheena asked a great question. She's like, anyone know of any .to or Toronto traded stocks performing well? She's looking for it as an investor. So, you may be someone who has the same idea. It's like, I hear about all these US stocks, but let's talk about Canadian. So I want to take you to our winning stocks tab. And then you'll want to go right to the very bottom, see where it says investment pyramid. Click on the investment pyramid. Now, we rank all of these stocks based on your risk tolerance. So what you would do is you would look at your risk tolerance. Let's say your risk tolerance is above average. Okay, that's where you, let me move my screen here so you can see these. So if you're above average risk, that means you would look to that orange sector and below all, you have 1, 2, 4 sections to click through to find winning stocks. We've already vetted all of these stocks for you. Our algorithms do all the number crunching. We make sure they're 5-star rated. We make sure they're industry best. We make sure that every stock that we show are aligned with your risk tolerance. So let's say, you're at the above average risk, you would click on that orange dot, that orange level, and it will show you stocks that are aligned with your risk tolerance. So there are 3 that pop up. Now that's fine, but let's look for a few more. So let's go back. And let's say, for example, let's look at the average or moderate risk category. Okay, Facebook, funny, right? That pops up. FB, the very first one that pops up. Look at that, up $6 today. Unbelievable. Lululemon. All right, so we still don't show some Canadian stocks, but let me share with you how this is set up. We are going to show either .to, the Toronto, the big stock, big capitalization stocks first, or we're actually going to go to the .v, which is the venture exchange as well, all of which trade in Toronto, in Canada. So Sheena, you would want to click through to all these different levels. And if we don't show, like I'm just clicking through here, if we don't show, here we go. So I'm on the below average risk site here, and here we go, cp.to. So that's Canadian Pacific Railway is the one that shows up there. But essentially what you want to do is you want to click through to every level that's aligned with your risk tolerance, your ability to handle risk, and it will show, it's interesting, the riskiest stocks show, look, all of these are Canadian. The .v is on the venture exchange, the .to is on the Toronto. So it's interesting, all of these show up. Look at IMT.v up 33% today. So then you would just click the ticker symbol and it will take you all the way to, now this is a penny stock, 4 cents. Again, be cautious of penny stocks, right? You really, anything on the venture exchange are smaller capitalization companies. I suggest staying with the Toronto Exchange stocks, .to. So that's why these are all high risk, right? They're just these lower priced stocks. But you really want to make sure as you navigate these that they're within your risk tolerance level, and that they're aligned with your investment strategy. Right now, nothing wrong with buying these stocks that are in the basic materials sector, because these are the ones that are going to provide a hedge as the market drops. Okay. All right. This is our page for the live stream today. I wanted to announce that we are launching the Financial Revolution radio show. We're so excited. We launched it yesterday. It can be heard on iTunes, Spotify, Stitcher Radio, YouTube, and of course on our site, which is right here, Financial Revolution Radio. Now we're going to pretty up this page and get it going, but essentially the the episode I recorded yesterday was Stock Market Rally on Fake Jobs Report, question mark, question mark. What is going on in the stock market right now? Is it real or a distraction? Blah, blah, blah. So check out this page, share it with your friends. We would love your support. I mean, we're connected on all Pinterest, Twitter, all Facebook, all of these different places to go to find our episodes. We would, just absolutely love for you to jump in there and share this with your friends far and wide. All right. Have a great couple of days. I'm going to be back in here live again on Thursday. We'll talk a little bit. There's going to be some interesting things to discuss, which are jobs, consumer spending. We're going to take a deep dive into that, and I'll make some recommendations on Thursday. As of now, while the market is booming, again, look at taking some profits off the table, leaving some cash invested, but certainly not, like I said last week, don't bet the farm in this market. All right, my friends, stay healthy, wealthy, and wise, and we'll see you next week. Have a great week or a good couple of days.